Welcome to TradeTheNBI.com. This is John. This report is for the 2nd of July. And we take a look. We had our nice bounce. So we were expecting at the end of the month that they would start to make move. Everything was looking rosy with the crossovers that we had. And we just got further continuation of the move going across. Now I've marked right here this 4.28, which is the previous red pivot right here. That's the next level that we're going to be watching to see to make sure this exceeds it, because if it starts to pivot lower before that point, then we know that we're going to be heading south. And then what will the targets be? Of course, positive extremes. You can see that we already started with one there. The fact that we've got this fading of the steel presents a little bit of weakness going into that. If we start to see a little bit more decay from the green, that would also be a little bit of a trouble sign. But we have the general markers where it's going, and so far we've been spot on with the direction. We knew that the NASDAQ was stronger than all of them and behaved as well. Also still looks pretty good in that great separation for the red-white there. Yes, overbought, so just a matter of waiting then for the Q to expect a retrace. The YM is already giving us the early part of that here, showing the down hawk, which was a target on the downside is 16,730. So pretty much just retracing. And it was interesting because the YM's not overbought with that. And it moved down into the oversold. This looks pretty decent as well. You'd want to see the steel dip below the cyan for cleaner short configuration setup. So just a little early on its indication, but it also allows for a little bit more of a move given where the stop is on it in particular, and that's what the red one is up at the top of it. So easy to see. Yeah, it's interesting because I did have a little email exchange with the member. In fact, let me go over the numbers while I talk about that. And it was, I'm struggling with, some of the concepts on what to do with the ES and that. And I'm like, okay, well, are you following the, daily NBI opuses that we've been doing along with the cyans? Well, no, I was a little afraid of those. And I'm like, okay, what about the 50K? No, I was a little scared to take those trades. And we look at the numbers, and the reality is I can give you all the information under the sun. If you don't take the trades that are right in front of you, then there really isn't anything that anyone can do for you other than to encourage you to just look at the results. We've got the performance reports is why I show them, that point out time tested, and to ignore it is to just basically throw away free money, because literally that's what we get when we follow the signals. When we take a look at the 50K as well as the other trades, just even from the last month, it's been phenomenal. And so, that's all I can say to that kind of an issue. It's plenty of people I've run across. They think that they can outthink it, or the news says something else. And if you're still following news by now and thinking that you're going to get some advantage from it, hopefully in seeing that just with our simple lines, there's no news involved in any of this, and yet it's been extraordinarily accurate. And I know that causes people consternation because they think that they have to use some kind of special intellect to, decipher what the markets are going to do. And at the end of the day, the math is there, and this is what the money does. It follows the math, not conjecture, news, or anything else. Yes, you can get certain events that cause people to get more involved, but the reality is all the algorithms are doing is hunting for weaknesses, and then they take advantage of each side of it and push the other direction until it gets carried away. And that's the nature of markets. So USO puts in a little bit of a buy. We had the crossover of the one there. I'm going to see a little bit more of a pivot up for that, but also deep red, just to point that out. Let's see if we can get the targets for it. And if we hold this down firmly, let's see, 39.33. So yeah, it's almost 50 cents roughly, somewhere in that range. But with the deep red, you've got to watch. I like that pivot coming back up. The problem we've got is the lack of green move up higher. So we may just see a little more consolidation with that. But we know with the upside, TLT started to break down a little bit as we began to see that, and sure enough, boom, pretty big decline from that standpoint. So the specter of lower rates there obviously should have pushed gold up a little bit, but the reality is gold had already pre-pressed the move on that ahead of time. Still looks decent and still behaving just fine. But again, I was supposed to add the ABM to this. Hold on one sec. Let's put that on there. And via the magic, here we go. So there is yellows all the way up to the 126, and that would be where I would be playing this one at this particular time. Simply because we're expecting a little more volatility at this particular point, and they were sort of pre-wrote it in anticipation end of month, and now beginning into July here. But all the way back from the original buy back down to 122 was a sound play. Most people, I doubt, took it because they just think that it's too hard to read the commodities. Same with Euro stuff, and this was pretty straightforward. We got so close to getting to that target, but we could see that this was clearly a bearish setup. We were just waiting for a complete breakdown here. We also had the green fade, and then also the steel now is below the cyan, confirming that we expect lower with that. And that is not a surprise. We knew that we were still in a consolidation. There wasn't any change in that configuration at all. AIG met our target beautifully within that setup. That was a nice one. CLF, we were not expecting a whole lot from it. We had the upper target so close within just a little bit, but this has progressed with its weak status. Actually, was beneficial that you had enough short breakdown that you didn't get a steel dip below, but an improvement now for cyan with this pivot here becomes a clear marker to transition. We've had the rising red, which has been holding things up, but needless to say has not broken out of that range. Still likelihood that we get the side target here, but it's been bearish for a little while now. Speaking of which, we had the WLT buy all the way back from here. Was in the 525, 530 range. Shot up a deep red, so we were expecting a retrace of all of that, and started up nicely, but obviously retraced all of that. It's going to be interesting here because now you've reached the crux of the cyan, moving back above green, and then you'd have the separation again, potential rollover. So didn't quite meet previous peak. If that actually does make a turn down, hasn't finished it yet. Something to look for. JCP has been right on the nose in the safety zone, doing exactly as expected within that. Take a look at some of our alert stocks. We'll start on the reverse side of it with Twitter. No surprise with that. We've been following that move all along. Tesla before was looking pretty decent, still is, just didn't do a whole lot the other day. PCLN had been sort of weak from the most part, but we had kind of the capitulation move, but then it gapped up in the morning, and it was a strong cross immediately on that, and even for 15-minute charts and that, and then literally exploded to the upside from that move. And actually continued to make higher red, and literally with that open, it was pretty clear. Pretty overbought. Well, just turning yellow is not even there. Netflix we love, have been loving it all the way down, and you can see that explosion of it. Everyone's shocked, doesn't understand. We saw the move take place the previous day right here on the breakout. You know, we see that from a DOC spread to the opposite side. Well, when it goes to the plus side, boom. Same situation. People ignore it, say, oh, I can't find anything to trade, don't know. That's why we go over these every day, just to point them out. No change. Google, we liked it as well. Thought that the weakness was an opportunity. Well, let's look at Facebook. I had closed out my Facebook off of the nice move, but then now we've got a new breakout set up within there. So I will take advantage of any opportunity to jump back to that one. FAS, as long as the FAS was moving higher, we were happy with the situation. That was a nice transfer. Boom, steel pops above immediately on the rising green. It had begun just a couple of days ago, got soft the other day, and now has exploded. Now we're going to see that red move above zero, but that was a strong jump. Baidu we'd been following for quite a while. Continues that move. So none of this is all that shocking, but needless to say, still impressive. This has been kind of flat, nothingness from Amazon for a while. It was a pretty sharp spike to the upside from there. So this is our first significant breakout kind of configuration with both steel and green, as well as a major move to cyan to the downside. So first positive from Amazon in a while. And Apple, we've been strong Apple for a little while. Continues to make nice slow plug, but capturing from the bottom, there's just really very little risk involved with that. I know that we've been ABM here flatline. It's just been a matter of retracing it from the supports here. It was pretty easy to see. Been overbought, interestingly enough, within this configuration. So I would take profits a little earlier than expected. Didn't quite get enough of a blowout move from it to really propel it. So that could be a problem. All in all, everything's looking pretty decent. Let's take a look at the 50K while we got an opportunity. Because again, I show it for a reason. You just can't get away from the numbers, and no matter when you've gotten into this system throughout the last year plus on any of the equity dips has been a money winner, no matter where you began within the setup, periodic return wise. And this is another interesting factor. I mean, now it's just for this year plus 174,000. And like I've talked about to members, every 5,000 to 10,000 increment, increasing the number of contracts. It becomes so exponential that I don't even put it on there because it would freak people out. And that's not to say that everyone can handle increasing the size of their trades, but their account doesn't always work for people because mentally they get in their own way, thinking about how much it is as opposed to just it's an entry and an exit, and there's nothing you can do about it or have to do about it. You just follow what the suggestion is, and that's it. It's pretty straightforward. Intraday is kind of innocuous, just steady climb throughout the most, sort of peaked out. That was the end of it. You got too far up above the plus 13. It was too much, and not much of a retrace off of that. Though we're in the middle of red now, but you can see we've already gotten into an oversold setup from that configuration. So should be fine to continue, at least the start of the day, and go from there. As always, though, continue to look for me on the private Twitter feed, StockTwits. Trade well.